What's up, everyone? This is Marcus with your not so weekly tax tip. So, you're filing taxes this year and you found out you contributed too much to your IRA. What do you do? If you contribute too much money into your IRA during the year, how do you correct the problem without facing a tax penalty? Here are some tips. First of all, you need to remember the annual limits, which is $6,500 per individual, $7,500 per person. If you're over age 50, you get that $1,000 catch-up contribution. So now you know that. By the way, this limit applies to the combination of contributions to both traditional IRAs and Roth IRAs. So, what causes excess contributions? These excess contributions, they can be caused by a number of different things. One is just the combined total problem. This occurs when you have, as most people do, more than one IRA. Remember, the annual limit is the combined total of all of your accounts, traditional and Roth combined. Number two, you make a contributions and you don't have any income. You have to remember that a contribution can only be made if you have income. Contributions made above your income but below the account limits are still considered excessive contributions. Another reason is you could overcontribute is whether your spouse is covered by a plan. You're subject to a phase out of your contribution. So there are income limits that allow you to contribute each year. If you exceed the limit, all of your contribution is deemed excessive. Now, sometimes you can contribute to an IRA, but not the full annual amount because of the allowed contribution. It can phase out when you had that excess income. Age limits no longer apply, so you now can contribute to traditional IRAs at any age. If you didn't know about this rule, the old rules required you to stop contributions in the year that you reached age 70 and a half or later. So what happens if you do place too much money into your retirement account? So you have until the filing tax deadline, including any extensions, to remove the excess contribution. Any excessive amount is subject to a 6% penalty for each year the excess contributions remains in your account. And you may also owe tax on any of those contributions and earnings created by the excess contribution. Also, traditional IRAs, you will need to account for the additional income on your tax return. So if you discover the problem after you file your income tax return, you may need to file an amended tax return. With Roth IRAs, if you have any excess, you can just move those excess contributions into the next year as long as your IRA contributions in the following year are below the maximum allowed. And then any earnings made during the time the excess contributions were made, they could be taxable in your account. With all that said, what can you do to minimize the risk of excess contributions? Well, the easiest way is to make it automatic. Set up an automatic withdrawal from your checking account to fund your IRA. Do the math to ensure that you'll never contribute excess or too much. You can also just make a lump sum contribution, right? You can just make a one-time contribution at the beginning or the end of the year. Remember, you have up until April 15th of the following year to fund your IRA. So I would consider taking advantage of that additional time. Remember this, rollovers are not contributions, so the annual contribution limits do not apply. So if you wish to roll funds from a qualified plan into an IRA, the excess contribution limits will not impact you as long as the rollover is handled correctly. Now, it is a good idea always to seek expert advice if you find yourself, just to make sure that you're compliant with the tax code, right? So make sure that any move you make, if you have an excess contribution, make sure you talk to someone. Until next time.